Hi there, Serial Trader here. Let's check in with crude oil. Now, since the last video, we did break below the level that was set last time and clearly had our 4-1 overlap. And we got as low as, let's see here, 63.62. But then we've had this huge move up. And that's not that surprising. Sometimes these, like earlier today was the OPEC meeting and the announcement. So that kind of thing often creates some short-term volatility. And in this case, the volatility was this spike up. Now, from an Elliott wave point of view, I'm definitely still favoring the potential for a major peak here, just under 73, and that we have our initial leg down in wave one of some sort, and then potentially an expanded flat ABC up. Okay, so a 3-3-5 pattern, and then right now we're sitting not quite at, but close to the 618 retracement of this initial move down. Okay, and then we have that ABC up as it's currently labeled, and I've actually taken a position now, so I was waiting. I like the move down. I like the bearish potential, but I was waiting for a move up, and today I certainly got it. So somewhere, in the 68.80s, I sold 3 August futures contracts. So that'll be $3,000 of movement for every $1 move in crude. So a decent position. And right now my stop is just above that all-time high. I actually put my stop at 73. And then obviously looking for a move much lower potentially. But even if this doesn't work out and we actually somehow, now it's very difficult at this point to not count this as complete and somehow have another move up to new highs. I highly doubt it, but everything's possible, right? There's no certainties here in this game. So even though I've sold 3 contracts short and that's currently my stop, I'll tell you, so short term, well, first let's go with the candlestick chart. So yeah, big candlestick today, good volume, and we're well above the T-line, and 3 T-lines crossed up above the T-line, and all those things. And actually on the weekly chart, we put in a bullish engulfing, and that's engulfing 3 prior weeks real bodies and a close well above the T-line, and the weekly 3 T-line crossing above the T-line, and pretty decent weekly volume too. So going off of that, it's like, oh well, geez, almost certain that we're going to go up and make new highs well above 73, and it's possible. It's possible. Now I'll tell you why I don't feel too concerned about the position. Well, first of all, it's got a reasonably tight stop. Close to 69 was the entry for the sell, and then the stop is 73. So for me, that's certainly a tolerable loss should it get hit. But the thing is, so here's the 4-hour chart. So 4-hour RSI, quite overbought here, okay? And we're right at that 618 retracement, which I expect, even if it doesn't contain this advance, it should have a decent little dip down off of it. I mean, we've gone just straight up here. Usually these spikes up have a reasonable retracement. And then on the the hourly chart here, so if you look, the hourly RSI is just, ridiculous, almost as high as it can go. Okay, almost in the 90s there. So I do expect, even if we had a modest pullback to 68, like if I go with the 10-minute chart here, actually, I'll go with the other 10-minute chart, because that's what I was trying to get my entry off of today. 10-minute candlestick chart. So my entry, I was just watching this thing go up, go up, go up all day, all day, all day, all day. And I said, okay, now we're starting to cool off, top out, go sideways. Oh, we've gotten below the T line. And then I sold 3 contracts somewhere in this range, and my average price of the 3 is, like I said, in the 68 80s. But then we had one last push up, so no, didn't get the top, went a little higher, and then near the end of the day started to kind of peter out and go sideways, but closed near the highs of the day. But that was kind of the rationale. Use a 10-minute chart and wait for that, just wait for this thing to start crossing down before you enter a short position. But this looks very extended, okay, short term here. And what I'm getting at is that even if you get a little dip down, like you could probably have a dollar or more down easily for some sort of minor retracement. At that point, I would move the stop, to below break even for a buy to cover order, and that way, if you caught a good pivot and we just fall down, multiple dollars in a good wave, great. And then obviously at that point you'd be ratcheting the buy to cover stop tighter and tighter. And if not, it comes up, well, it takes you out, and you break even or make a small profit. So that's kind of the rationale there. Just adding some confidence that you'll be able to have at least somewhat profitable exit, just because short term the conditions are just so overbought on hourly and 4-hour RSI. And you just look back historically, 4-hour RSI got to this level, you had a pretty good dip. You had you went from somewhere in around 66 and change down to 62 or so. So a multi-dollar move down. And really liking this hourly RSI because it's just so overbought. It's going to come down and cool off. So not too concerned, even if inevitably the wave count, as laid out in the hang on here, as laid out in this chart, even if this is wrong and this is not the top and we actually go up and make a new high, it's not going to be in one shot. This is going to have to come down and consolidate a bit before we do that. So that's kind of the basis for a trade. Try and catch a major pivot, but if you're unable to do so, at least utilize those short-term, extremely overbought conditions to exit at break even or better. So we shall see next week. Hopefully that's a good update. Serial Trader signing off.